Hello and welcome to Morning Trade with Money Control. I'm Karunya Rao. We're here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries. Guys, first off, I would like to apologize. There was a technical snag at our end and you had to wait. So please keep commenting on our live feed. We're reading all of your messages and we will try and address them during the course of the show. But before bringing our guests on board, I would like to see how the global handover is looking like. No surprises from the Fed as it's raised interest rates by 75 basis points. Stocks rally with the Nasdaq posting its biggest daily gain since April 2020. Fed Chair Jerome Powell hints at a slower pace of hikes going ahead. He also believes that the US is currently not in a recession. US futures now trade with minor cuts. European markets closed higher as investors focused on the latest monetary policy from US Fed Reserve. Stock 600 closed 0.5% higher with most sectors and bourses trading firmly higher. Following a strong handover from the Wall Street, stocks in Asia mostly trading higher. For our own markets, the SGX Nifty hints at a strong open. On the show, we discuss Fed's latest rate hike and its potential impact on markets world over and the Wall Street, and how the US GDP numbers could set the mood for the coming days. And on the Wall Street, we chart the important levels to watch ahead of monthly expiry and discuss the technicals of Tata Motors, Biocon, Dixon Technologies and Exide Industries. Okay, straight to the big global market queue overnight. The US Fed Reserve delivered its second consecutive 75 basis point hike as it seeks to tame inflation without creating a recessionary environment. My colleague N Mahalakshmi joins us for more. Mahalakshmi, welcome on board. Want to talk about, first off, the reaction that Wall Street saw after the US Fed made the announcement to hike rates, and what a fantastic rally that we saw. But historically, these up moves, this exuberance typically tends to reverse. Is that likely this time around as well?
Hi, good morning, Karunya. Obviously, it was a fantastic rally yesterday, and it's very hard to say whether it will reverse or not. But my sense is, first of all, let's just look at this in a very commonsensical approach. If you asked anybody in the market yesterday, and all of them, whether it was CNBC or Bloomberg or Reuters or whoever, if you know, all the projections or all the forecasts were that there would be a 75 basis point hike in Fed rates, right? And that is what was delivered. So if something is expected, the majority expectation is something, and that is what is delivered, the market should not ideally react. So obviously the market was not reacting to what Powell did, but what Powell said. And that is where there is a slight problem, I feel, because I think the way the market has reacted and what Powell actually, what Powell said versus how it has been interpreted, there is something that is lost in translation. Why do I say that? So he just said, I think to me, just three things stood out. One is, he said that there is no recession. They don't anticipate a recession, and we don't have to go into a recession to address the inflation issue. That is one side of the story. The other side of the story is they continue to say that we will do whatever it takes to ensure that inflation is brought down, right? And so this is really, the recession part is not really in Powell's hands. It is an outcome of the calibration that Fed does and how the US economy and demand responds to that, combined with how the supply constraints pan out and what impact it has on prices. So I think that's the main thing. The second thing is, he said that we are just watching economic data and our moves are going to be meeting to meeting. That means whatever is to come is going to be really driven by the economic data. And we have a long way to go for inflation to really come down. So I don't think anything he said really corroborates. I mean, he didn't give a path in terms of, how much of deceleration they're going to tolerate. Will they path in terms of, if we do see economic data which shows that we are into a recession or risk recession, will we stop the hikes? He's not hinted at any slower pace. It still continues to be 3.25% to 3.5% by the end of this year. At some point, rates have to come down. I mean, that's no surprise. It has to come down at some point in time when Fed gets the comfort that inflation has been reined in. And we don't have any clue about that yet.
But
So I wouldn't take yesterday's rally too seriously. I think it's also an outcome of, Microsoft, Google. I mean, the trade itself was poised very favorably for tech stocks yesterday. Hence, you saw outstanding tech rally yesterday. But I don't think we should be reading too much into yesterday's rally.
Agree to that. One important line that stood out for me in terms of commentary was that the next rate hike could be enormously higher. Already, 2 days ago, we were talking that 75 bips this time around was already priced into the market. Anything below that would have been a surprise, or above that would have been a surprise. But now all eyes will be on the September meeting. Could it be even 100 basis points that we're looking at? Because enormously higher, quote unquote, were the words said by the Fed chair. And if that does happen, what will markets now be factoring in, and how could they likely react?
Yeah, so I think 75 basis, when you say enormously higher, unusually higher, I think is the term you use. But whatever it is, 75 basis points is unusually higher. So and if it had to be 100 basis points, it should have come in this policy. It should have come in yesterday. I don't think the next one is going to be 100 basis points, at least based on the understanding of economic data we have right now. Unless something remarkably changes over the next few days and the economic data is really adverse, inflation is not going down as expected. And, we are right now seeing a softening in energy prices. We've seen softening of commodity prices. If some of those things start to change, then obviously we don't have the data right now, but the information flow at that point will determine what the quantum should be. But if we were to just interpret based on the data available right now and what Powell meant by that, I think it couldn't be more than 75. He's probably talking about 75 basis points in the next move.
Okay.
And I think how do you get to 3.25 to 3.5? That's just 100 points away, right? So it couldn't be 100 points at one shot. But in any case, I think I was also reading a lot of reports yesterday where a lot of traders in the US are talking about, meeting hikes, because between now and September, there is a lot of time. And it's possible that if the Fed is really that keen, about, calibrating and looking at data and responding, they might keep this as an option. And that might have been one reason why yesterday, minority expectation of 100 basis points didn't come true, because you might want to wait for a few more days. There is still another 10 days to go before the inflation data for this month comes out, right? And you might want to keep slight room for that intermeeting also.
All right, Mahalakshmi, many thanks for joining in and helping us put this in perspective. Let's see how our own markets are geared up today. Definitely the cues are very strong. 75 bips was already on expected lines. Shrikant Chouhan joins us now from Kotak Securities. Shrikant, like I said, cues are very positive. SGX Nifty indicating to a good start for Dalal Street, and today is also the monthly expiry. What kind of an action do you expect?
Good morning, Karunya. Good morning, everyone. I think the market was already expecting that the 75 bips will come. It will not be somewhere close to 100 basis, and maybe because of that we saw a rally in our markets yesterday. Our markets, especially financials, technology, both did well in yesterday's trading session. Today we need to see that how now actually Asian markets shapes up from here, and also we need to see that after opening to the crucial ultimate resistance of 16,800, how market reacts. Because whenever the market has reached to the levels of 16,800, we saw some profit booking. So this time we need some strong sustenance above the levels of 16,800, which will actually help the market to move to the next levels of 17,000 or 17,200. But broadly, we are of the view that the market is forming higher top, higher bottom series, and it is favoring to those traders who are buying on dips. So if there is any correction during the day, then certainly we should be buyer close to 16,600 or 650. But if there is any higher opening close to 16,800 or 850, then we should just stay away from taking any specific position, especially on index.
Okay. I want to straight dive right into the big stocks in news. First up will be Tata Motors. Significant amount of loss that they've posted this time around. In fact, they've widened to more than 5,000 crore rupees, and this was largely dragged by a weak JLR performance. Of course, the commentary and the outlook on JLR has been intact, so that perhaps could give some respite to the investors and to the street. But if we look at the last 4-5 month move of a Tata Motors, it has not done much for investors. Back in Feb also it was at 450 levels, and it is there even as we speak. So what lies ahead?
Yeah, for Tata Motors, there was like expectations that the company is going to report some losses, but what is important is the commentary, and in that commentary they are still bullish. They have given positive outlook. Also, if we go through with the entire pattern of Tata Motors, then it is holding well above the mark of 400, 420 since last several weeks, several months. Even though there was weakness in the market, we saw sustenance above the levels of 400 because of the overall momentum in the auto index and the stock. We are of the view that if there is any correction or if there is any lower opening because of the specific reporting of the numbers, then we should be buyer close to 420, 425 with a target of again 470 or 500. We are expecting broadly stock to do well in the near future.
Okay. Next earnings candidate on our radar is Dixon Technologies. As opposed to Tata Motors, this one has seen a stellar quarter, 150% growth in profit, healthy revenue, healthy operating performance, which have aided the overall profitability picture of the company this time around. But the stock last 3 months largely range bound. It has seen its bouts of an uptick, but hasn't been able to really sustain. So tell us, what do you foresee on the chart?
Yeah, for Dixon Technology, the level of 4,000 is acting as major psychological resistance for the stock. And all these stocks will come into flavor if we see the broader market to turn higher. I'm going to say if we see the market start sustaining above the mark of 17,000, then only we can expect further more activity in such type of stocks where we saw a deep sell-off from the highs and which rallied very sharply in the previous up move. So we are of the view that it is going to remain in a range, but yes, the broader pattern of the stock is suggesting us that it is it is rebounding every time whenever there is a fall in the stock. Delivery-based volume is also increasing. If we go through with the entire data of last 2 months, then based on that, we are of the view that we should be buyer if there is any correction close to 3,500 levels. And if there is any higher opening close to 3,950 or 4,000, then there we should look for taking some profit on long positions.
Okay, all right. Let's quickly address some of our queries. We had to, line up a few questions. We have very limited time today, so just a handful of names. Ramkumar Menon wants your view on HDFC Life. This has been a very slow mover, rather disappointing actually, despite all the fundamentals being intact. What are the technicals telling you?
I think the merger of HDFC and HDFC Bank is playing a lot for this particular stock because there is specific some news flow which is actually not helping to the company. But broadly, we are of the view that the stock is in the range. If there is any correction, then we should be buyer. But even at current levels, the risk reward ratio is quite favorable. If there is a medium to long term view, with a very short term view, it is better to stay away because it is finding resistance at every single up move. So if we see the market is, if we see the stock is available at 520.25, then there we should be buyer with a medium term view. We are expecting stock to move towards again 700 in next few months.
Okay. Another stock is SpiceJet. We don't discuss it very often, but last 1 month, the stock literally has been perched at the same level, hasn't moved more than 1 or 2 rupees up or down. What do you think lies ahead?
I think now the stock is very close to its previous lowest level, which the stock has made in the month of March 2020. I'm going to say in the during the period of pandemic. So now it is very close to those levels. We need to see that how actually the overall pattern of crude oil shapes up in the near future. But broadly, we are of the view that if there are any investments, then we should stay invested in the stock at current levels because it is very close to its previous low. We are expecting stock to move to rebound in the near term, as we are expecting some more correction in the near future from in the crude prices.
Okay, next is our viewer. His name is Trilok. He wants your view on Aavas Finance for a long as well as short-term horizon. Decent uptick seen actually. It's back once again to those May high levels of close to 2,300 rupees. Do you think this momentum could build on and it could surpass those levels as well?
I think it will rebound certainly from here because the stock has fallen to the extreme levels of 1800. And when it was like correcting from the highs, it has corrected to the crucial important level where the stock was having excellent support. So we are of the view that the stock is going to spend some more time between the broader range of maybe 3000 and 1800. Gradually, we are expecting stock to move towards 3000 levels. So it will take time, but certainly it is going to move towards those levels. So it is better to hold on all the positions.
Okay. Shrikant, what are your own picks that you like right now? I think one of them is definitely a private sector lender. If you could flag off the names to us and the key levels to watch.
Yeah, I think in that yesterday we saw activity in almost all the financial stocks and they did really well. In that we like HDFC Bank because the stock is very close to its breakout level of 1405, 1410. Above that we are expecting stock to move towards 1450. It is forming some rounding bottom sort of formation, which will take a time for the stock to move higher, but eventually we are expecting stock to move towards 1500 plus. So in the near term and in today's date, I think it looks really strong to buy with a stop loss at 1380. Also, we like Jubilant Food, which is around some 555, 560 levels. There we can keep stop loss at 545. And there also we are expecting stock to move towards 590 or 600 based on its daily formation there where it is forming some positive divergence. I'm going to say it is turning positive. Oscillators are indicating us that the stock is going to move higher.
All right. Thank you so much, Shrikant, for sharing your views with us on the market. Today is its expiry as well, so I'm sure a lot of people will be watching it closely and all the critical levels to watch out for and sharing, helping our viewers out with their stock queries. With that, guys, thank you so much for tuning in. I apologize once again for starting out late, but come back tomorrow once again with your queries. We'll try and address them then. Thank you so much for tuning in.